Welcome to another episode of the Don't Screw Up Your Kids podcast. I am your host, Kalisha Washington, and I'm super excited to bring to the front a tax strategist. Let me bring her on up. Ayana Makai is a tax and compliance advisor, a wealth strategist, and mother of five who helps families and business owners build financial clarity, stability, and legacy. She brings nearly 3 decades of experience and a grounded real world approach to money that prioritizes peace over pressure.
Yeah,
Ayana, welcome.
thank you. Thank you for having me.
Man, with over 3 years or nearly 3 years of 3 decades of experience,
30.
being a
Yes.
mother of five, like
Yes.
what patterns do you see over and over again in how families and small business owners approach money and taxes?
So, first off, I think that there are a lot of people that are transitioning from the W 2 earner into entrepreneurship. So, I just want to applaud that at first because staying in a W 2 job, and there's no shot, I did it for 30 years myself because my tax business was a side hustle at first. But you can't grow. Someone is going to always prevent your growth there. So you need entrepreneurship in order to set your own schedule, make your own money, and build your own financial future. So the patterns that I see is definitely allowing people to have others dictate their things, their like I said, schedule or whatever, or when they get into entrepreneurship, they're not taught. So there are some people who take that leap and to go into entrepreneurship, but they don't have any instruction. And all the money that comes without having any instruction is where I can help people do better with it. But there's all kinds of stuff.
Yeah. I remember my first, not even my first year, my first time making six figures as a principal. I made 116,000. I paid over 40,000 in taxes. I was
Yes.
in California. And so
Yes.
I was when I looked at my actual W-2 and I was seeing how much taxes were being taken out.
Yes.
And then we think we're doing something, we get a refund at the end of the year. That's just money that we have loaned to the government, right?
Correct.
How can we better position ourselves to not have to carry such a heavy tax burden?
So essentially, when you are over six figures, you are in a higher tax bracket, period. They're automatically going to be looking for about 30%, if not more. So, what a W 2 earner can do since they're not an entrepreneur is real estate. You need to find other things that are going to allow you to benefit from the deductions that'll help offset. And real estate comes with depreciation. So that right there can help offset your tax liability and then lower it. And then it could increase your refund if you like that, or it at least can balance out so you don't owe anything. I believe that most people should adjust their um, W-4 form when they fill it out for getting a job so that they can get their money up front. I don't the refund is not a terrible thing. I don't want to put it out there that it's a terrible thing, but the government is making money on your refund. They're holding your money all year long, investing it and doing all those kinds of things. And then when you get it back, you get that flat number back. Why
Mhm.
not give it to yourself first and then invest it? You invest in it for a year's time is better than the government holding it for a year and then giving it back. So it's a different mindset.
When you say adjust the W-4, what do you mean?
So when you fill out your W-4 form for a job, you're pretty much saying they've changed it over the years, but for a long time, you used to be able to say single, married jointly, and married filing separately. And then you can say withhold the highest amount of money, you're exempt. There's all kinds of things you could put on your W-4 form that allows your employer to withhold the amount of money that dictates what you get at the end of the year. Of course, it's compared to your income. So instead of allowing the employer to withhold the most, you want to plan for it and see where you actually fall in the tax bracket, especially if you're salary. You can do an estimate of what you're making for the whole year and say, hey, this is how much I probably should pay. Even if you do an extra 5%, the rest of it, bring it on home. Put it in other cash accumulating vehicles so that your money can grow. So it's just the play. And you can adjust your W-4 form all year long. You don't have to do it in the beginning of your job or your position, and you don't have to do it in the beginning of the year. Look at your pay stub right now at the end of January. Do you like what you see? If not, adjust your W-4 form.
That's so good. Most of us don't know. I think that when you fill it out first, when you first get a job, you fill it out, you don't think about going back to adjust it later on. But sometimes your life circumstances change. People have kids, people get married, and there are things you can go and adjust that. And I remember one time, I had like two jobs, and I think you get 1 point for this being your only job.
Yeah.
And I didn't think about it until I was, the next year, like, oh, wait, I could have got that one extra point to save me on my taxes because this was my only job. And so it's good. And when you say people should use real estate to lower their taxes and their depreciation with that, can you explain that a little bit more?
Sure. So I became a six-figure earner a couple years back, and I got hit with the tax returns that I don't know, they were just absorbing it. And with five children, at one point in time, it was like making it rain. When before
Mm-hmm.
I had to learn about the strategy part, just because I was doing taxes didn't mean that the strategy part came along with the 30 years. That came later. But yeah, so when I got in that bracket, it felt like I was working harder to get money. It just seemed weird. Like, how am I making more money and I feel like I'm being penalized? So I decided to, in addition to trying to figure out this whole tax thing, I had already had a plan in order to set my children up with assets. So my goal was to purchase a property, a rental property for each of them. Sidebar, I I'm against as much as I can. That's why I want to educate people, having every generation start over.
Yeah.
So my goal with them to have their property after, I was long and gone, was to be able to have some kind of asset. A lot of people in our culture sell their assets off and for whatever reason don't understand why they should keep them. So back to the original question. What happens is you can depreciate your assets in such a way that it kind of offsets your income, because as a rental property, now these are rental properties, it has to be managed as if it's a business. You get to write off the expenses and all that other kind of stuff, but you can depreciate your rental property over 27 and a half years. There are certain things that you can do in it called cost segregation, and that's a tax strategy, and it's very high level. So I'll give you the high level portion of it, but there's certain things that you can accelerate the depreciation on and get a higher amount. So you can do something in 7 years rather than 27. So
Mm-hmm.
imagine taking that amount of depreciation and offsetting any income that's coming in, and it kind of plays a different role rather than everybody else waiting until the end of the year who has a business or a rental property and takes their income and say, okay, let me just spend all this stuff so I don't pay taxes on it. No, you don't want to do that, because that's not winning. All you're doing is making the money in order to put it out so you don't pay the taxes. How about we find other strategies in order to allow you to keep your money and still pay low taxes? And depreciation is one of them.
That's so good. Where are you located?
I am in York, Pennsylvania. It is a town that is kind of in between Lancaster and Harrisburg. I'm originally from Philly, so if anybody knows about Philadelphia, I'm about an hour and 45 minutes away from there.
Okay. Yeah, so I'm from California,
Okay.
and buying real estate is harder for
Yes,
people because it's so expensive. But I always tell people you don't have to stay in California. Like, you don't have to. If you live in a state that's very expensive, buy the rental property in another state. Most of the
absolutely.
taxes we're paying are federal taxes anyway, and that's for the whole U.S. And so
Absolutely.
you can buy rental properties in a place where it's more affordable.
Absolutely. Absolutely. Mine are all not local.
Yep, that's
Yes.
so good. And so many people work so hard, and I know
Yes.
you specialize in helping people who own small businesses. What
Yes.
is what can you say to people who really have that I just need to work a job mindset to help them see how it can be beneficial to start a small business when
Yes.
it's possible?
So I'm going to use my story, no judgment at all. I'm not judging anybody else. Like I said, I did the whole corporate thing. I just retired from corporate America in May of 2025. I
Congratulations.
am, Thank you, thank you, thank you. I did it at 45. I have 5 children, 3 of which we put through college, and 2 of which who have done the LLC route. My youngest is in 11th grade. She's 17 and she has her LLC. So if that doesn't tell you anything about a mind shift, I'm gonna tell you right now. Okay.
Yeah.
So that part, period. Now, my side hustle, like I said, has always been along corporate America. I kept corporate America the job for security. I wanted to make sure my kids had insurance. I wanted to make sure everything like that. But um, if in hindsight, I wish I would have come out a lot earlier. But in the meantime, while I did that, I started 3 entities. And I got to the point where I had one entity take care of the other. And then this entity took care of that one. As soon as I figured out how to close the gap, I looked up and I said, okay, I'm done. Now, to be honest, it took a little bit of disrespect to kick me in order to say, I don't need to be here no more and take what you got going on. So then my eyes were open, like, you've been doing this all the time and not really paying attention, because I was on the path of preserving and acquiring for my children. I was ready to lay down on the sword. It didn't matter what everybody did or said to me, because I was working to make sure they had something. But something in me said, okay, you're not going to take this anymore. And I looked up and I said, okay, I'm retired. Now I just want to teach people.
Mm-hmm.
I enjoy this. I do this for fun. I attract people who want to learn and ascend and do all these other kind of things. But I just want somebody to know that start it on the side. It will grow. Put the time and effort into your own thing, more so than the time and effort that you put into somebody else's, because it's just important. Your worth is there. It's not where somebody is writing you a check. That consistent income is safe, but it's not, it's limited. So I hope I answered your
That's
question.
huge. That's huge, because we're seeing that most jobs are not secure anymore.
Right.
People
Right.
who worked for the federal government for years, they did so because they wanted to have a safe, secure job. They could retire and
Nah,
get a pension.
that
And
was
we
it.
saw the earlier part of last year, they were losing their jobs.
Right.
Now AI is taking over a lot of people's jobs,
Yes.
and so many jobs are being replaced already. I was reading something, I don't know, somebody, I was on a Zoom this morning, a business Zoom, and they were talking about how over the next 10 years or so, there are going to be more robots than people in the world. I was like,
Yes.
that's crazy. They're trying to make 10 billion robots. I was looking at the fact that Elon Musk has these Tesla homes, tiny homes that he's building with robots.
Yes.
So a lot of people are being replaced. Their
Mhm.
jobs are being replaced. And so the security that we once had is not today. That's not
Correct.
today.
Absolutely right.
And I also help people start their own home-based travel business. I'm like, people gonna travel anyway. You need to start a business that will allow you to take advantage of these tax advantages, as
Yes.
well as secure your own future.
Correct.
Because if you don't want to tolerate somebody being disrespectful to you, especially if we're getting older, I'm 50, we're not tolerating that.
Exactly.
I don't have
Exactly.
time for that. Okay.
Yes.
Do that to a 20-year-old, but don't do
Yes.
that to me.
Exactly.
And
Felt.
so, yeah, so like things are changing and we have to change with the times.
Yes.
We're still living in our parents and grandparents age in
Yes.
terms of getting a job and staying there for 40 years.
You got it.
Yeah.
Agreed.
So in your experience, what's the biggest misunderstanding that people have about how the tax system actually works?
Oh goodness. This one's an easy one, right? So for me anyway. So people think taxes are forms, refunds, and payments. That's it. And I don't want to like say anything negative about it, but no, if you really think about what taxes are, it is the byproduct of the decisions that you make all year. If you're not managing your decisions, the chips are falling where they may, and you
Mhm.
have to take it. So it's not about the form. You can make the form look all, it's like putting lipstick on a pig, but if you don't plan for it, then you just have to take it. You know what I mean? If you get your refund, you're excited about it, but really you could have did something better with that. If you have to pay in, it's your fault, because you probably could have did other things along the way. Nobody wants to pay this. If the billionaires are paying zero, why are we paying thousands?
Mhm.
That's it.
I remember when Romney was running against Obama for president, and they were talking about he was a multimillionaire or even a billionaire. I don't know. I know he was a multimillionaire, but they were saying his secretary, who makes 30,000 a year, pays more in taxes than he pays.
Yes,
We got to get with the program and do better,
exactly.
because, and for me, I don't fault those people who are able to take advantage of the tax system that's created for us.
Yes,
I just
yes.
want to make sure that I take advantage of it too.
Absolutely. It's all about education. I didn't know everything a couple
Yeah.
years ago. I already told you what my struggle was. I got my refund and then they ate it. I had to figure out how to do something different.
Yep.
So, yes, and I do want to make a very clear point. Tax strategy is not about paying zero taxes. That could be an avenue, but tax strategy is a lot more than that. If you are a business owner, you get to plan how you want to move. If you want to pay zero taxes and we can figure out legitimately how to do that, perfect. But you get a 2-year plan, 3-year plan, 5-year plan, which I work with people when I come back quarterly as part of the package. And you say, hey, I want to buy an asset, I need to buy a rental property in a year or two. We have to switch. No one is going to give you money in order to buy a rental property if you're paying zero in taxes, because it looks like you make no money. So we have to, you know what I mean? So tax strategy is a lot different than just paying zero. But yes, you do want to minimize your tax liability all day long. But when it's time to do something different, then you want to do something different.
I love that. So let's dig into that a little bit more. So you're saying that when people focus on making, like, paying no taxes, it shows that they had no income or they took a loss. And so if they want to be able to purchase something, they need to show profits or higher income, which requires them to pay some taxes for those years.
Yes, it shows that their income was utilized for expenses. Doesn't show that they have no income, but pretty much, yes, they absorbed it all by spending it all.
Yeah.
Yes.
Yeah, that's good. Um, what are some deductions that small business owners can take advantage of that they may or may not know and maybe leaving money on the table?
We have the normal ones that easily Googleable. You can find your home office deduction depending on what business that you do. You can do your vehicle depending on what you have going on. If you're an Uber driver, there's also, just a sidebar here, a lot of people don't know they're business owners. If you get a 1099, you're a business owner, because they're treating you as an independent contractor and you need to track your things. So if you went through this year 2025 and did Uber, or independent contractor for Amazon, and didn't track your mileage or things associated with that, and you got your 1099, you just got income with no taxes withheld. You are not equipped to offset that stuff, because now you have to scramble and recreate records. So whenever you fill out a W-9, you are a business. You can be a sole proprietor or you can tie it to your EIN. So anyway, back to the other question. I'm sorry. But yeah, so you have vehicle write-offs and things of that nature. Um, Equipment. I mean, honestly, I can talk to people in different niches. So if you're a social media person, then everything that you have, you can write that off. Computer, microphone, hair and makeup, any of that kind of stuff that you're going to do because it's part of what you deem necessary for your business is a write off.
See, I didn't know about the hair. I spent 125 getting my hair retwisted.
You know what I mean? So if that's a monthly expense for you because you want to do that once a month and you deem it necessary because you show up on camera,
Mhm.
you have support for that.
So good.
That's part of you. Yes, write that off.
What about clothing? Because I know that they're saying something about, I've heard some people were saying you can write off your clothes. Some people saying you can't if it's not uniform.
Right.
If it has a logo like yours does, is that a write off?
Yes.
If even if I'm on screen, like clothes, regular clothes, is that a write off or no?
So clothing is kind of restrictive. So what happens is they are the note behind it is if you can wear it somewhere else. Like if I wear a buy all green suit because I'm promoting green tax out there in the world, I can wear a green suit somewhere else. That's not a write off.
Okay.
So that's kind of what the restrictions are there. Um, If I bought a bunch of stuff that is logoed, it's advertising. So this falls in my advertising bucket.
Nice.
So that is the difference. There are loopholes that people try and do all that other kind of stuff, but that is the clean cut way to describe it.
I love that. Thank you so much. Now, when you talked about Uber drivers, I know you have the option between like mileage or actual expenses. Can you explain the difference between those write-offs?
So when it comes to driving an Uber, yes, I would suggest that you do the mileage, but you can still also capture the expenses that are associated with having that. So if you're crossing tolls, you want to make sure that you can write those off. If you're in a hot area and you actually just want to be very nice to your clients and have bottled water in there and it's only for them, you can use that as a business write-off as well. So there's a lot of different things that I've seen with Uber drivers and things of that nature. Some of them, this is a really outside of the box thing, but it works. They pay a fee in order to help advertise. So that way they get cards that has probably a list of restaurants. Now they might make income from it if that person turns it in, but that's a business expense because it's like advertising. I'm going to pay $50 in order to be a part of this program. And then when I hand these cards out to people who have never been into this area before and say, hey, if you go to this restaurant and you turn it in, they might, like I said, get income on that side. But the $50 in order to participate in that program is also something that can be written off.
That's good. Now, how does it work on if you don't take the mileage deduction? How what all things can you write off?
If it is solely for Uber, then you can write off things in its entirety. So the vehicle itself, you definitely will get deductions and benefits associated with the vehicle. But say you have car insurance on it, you can write off all of the car insurance because it is for that vehicle and you are using that vehicle solely for that purpose. Um, Maintenance, all of that kind of stuff. So it's a little bit easier and clear cut. I don't want to say easier, it's clear cut if the vehicle is just for Uber. Then all of the expenses associated, liability insurance, like I said, auto insurance, any of that stuff associated with that car is definitely 100% written off. Now, if you are using a car and it's the same as your personal, it's the same as the office deduction when you do home office. You have to allocate a portion of your expenses and you have to calculate that out. So, say you drive Uber 8 hours a week, you got 52 weeks. You have to divide your insurance bill for a whole year out in order to be able to see how much one day is worth. And then you get that times 52.
Okay. And then how does for a small business, like let's say I took you out to eat so that we could talk about the taxes, is that deductible?
Yes. So, well, here's the thing. If I paid for you because I'm the tax one, then yes, I would be able to write that off. If
But
you
if my
paid
taxes are for my business though, do I get to write it off?
for your business,
Yeah.
no, because technically when you get to write your meals off, you get to write your meals off when it's related to your business.
Okay.
So if I am attending a dinner with you and we are discussing your podcast or everything about it, like you are your walking business card, that dinner is solely you presenting everything. Yes, you can write that off. Now, if you come in to talk about taxes and I paid, then technically me as a tax professional, it would be my,
You're right
if
off.
we sat there and we talked 50-50 and we split the bill, we both got it right off.
Okay. That's strategy right
That's,
there.
you know what I'm saying?
I love
Yes,
that.
yes.
What do you wish people knew before coming into your office and asking you for help with their taxes?
Small business owners, do not commingle your funds. If I could, that is the hardest thing to undo when people are used to commingle their funds. And it's easy for somebody to do it, especially when you're brand new in your business because you're using whatever card has money on it. And that hurts you. And co-mingling, if just to give everybody an understanding of what that means, is your personal finances and your business finances are intertwined, and it is just painful in order to fix that. And strategy is hard to implement when you do not have clean records. So that, I would say, is one thing that I wish that everybody knew, how to not commingle their funds. And it's easy. I will tell you that if you do something as simple as one of the things you can't do right away without having a business bank account, or in order to get a business bank account, is you have to get your business registered. So most states charge a registration fee. You have no choice but to pay for that personally. You can't, because you don't have a business bank account.
Mhm.
So what happens is that is an owner's investment. And you need to put that in your books as if it's an owner's investment, but it is also a business expense. But next thing you want to do is advertise. Your business doesn't have any money. You just took your documents, you went to the bank, and they gave you a bank account. What happens is, I call it a obtuse triangle. You want to stay on the L side of the triangle. You want to take your personal money, you want to transfer it to your business, and then your business pays for the expense. If you take your personal money, because that's where it has, the card has your money on it, and you just pay for the advertising, you're commingling funds just like that. You do not want to close that triangle. Same thing if you take money out of your business. You want to go the opposite way. You take your money, you transfer it to your personal. It's an owner's draw. If you are an LLC, you are not paying yourself payroll. That is incorrect. You cannot do that. You have to do an owner's draw. And then once you put it in your personal, then you can pay for your lights and your deodorant and stuff like that. But if you do that shortcut, that is commingling funds, and that is in the way all the time. When it comes to individuals, I just want individuals, when they do their taxes, or at least come into me, just to know your just know your finances and your stances, and understand what your goal is. There's no judgment that you want to continue to be a W-2 player, but do you want the government to play with your money and borrow it and lend it to everybody else, or do you want to do it?
Yeah.
So that whole refund mindset, we need to change that. I don't want you to have to pay in. It's very hard to break even with the new forms that they have. They're kind of tricky, but at least monitor it in such a way where you can say, hey, I can reserve this money over here. And I have wealth accumulating tools and vehicles in my business. My ecosystem has 9 services. So I can get you from point A to point B, and you can build a legacy and trust and wills and all that kind of stuff. But you have to change your mindset. So those are the 2 things that I would say. Don't commingle your funds as a business owner, and 1099, all of that kind of stuff. And then as an individual, just know what your financial position is and make a different decision.
Tell us the 9 services.
Okay, so the 9 services are tax planning and strategy, tax preparation. I do book cleanup for the people who come in with the commingled funds. And then we do bookkeeping. And then, so that's 4. Do credit repair. A lot of the people want to come into me and get everything cleaned up, and then they want business funding. I offer business funding, and I have an avenue for business funding, but I can't get you there if your credit's not good. So then I have to repair your credit, and then I do your business funding. And then I offer, I use life insurance as a way to let people grow tax-free money. So I am a licensed insurance agent. And then the very last things are wills and trusts. Is that 8 or 9? I think I went through everything. But it is essentially a financial ecosystem. When I first started, it was like, okay, now that it's, my goal was, let me do these taxes. Let me save you money or increase your refund. And then once I do these 2 things, whatever it is, I have freed up some money that you didn't know you had. So now go do some, go invest over here, go invest over here. But I'm sending everybody to someone else and not knowing that they can take care of them.
Yeah.
So then I took the next step to say, okay, that's what you need. I had a couple of you need the same thing. Let me set myself up for the next person that's gonna need that, because otherwise I know what your end game is. And if I keep sending you out there and they're not taking care of you, I might not hear from you again. Or when I go and check in, you're not where you need to be.
Yeah.
So I just got to the point where I became all, which is all the hats I used to wear when I worked for corporate America. So now I wear them for my own firm, just so I
Mhm.
can help somebody else figure out how to make an empire like me.
I love it. And one of the things that you mentioned, like having, when you talk about longevity and you talk about that building that generational wealth, I love that you started by saying every generation does not need to start over.
Yes,
Yeah.
yes.
What are the benefits of starting an LLC?
Um, the benefits of starting an LLC, for one, if you commingle funds, you don't get that benefit. You do not get that benefit. I just need you to understand that. What comes in addition to the tax side of it, because I set up business entities and structures. That was number 9.
Okay.
Okay, so being able to set up business entities and structures correctly. You leave my office, you leaving with all documentation. I'm making an appointment for you at the bank. You walking out with a bank account. A lot of people don't do that. They don't make those steps. They don't even set up the business bank account. But anyway, if you have an LLC, one of the things that come with having an LLC is the protection of someone not coming after your personal assets. If you commingle funds and something happens where you get some kind of lawsuit or whatever, knock on wood that doesn't happen to anybody, but if it does, you got to be prepared for the worst. And they see all your stuff is commingled, they're not going to sit there and say, tell me what is business and what's personal. They coming for all of it.
Hmm.
So there's no benefit to having an LLC if your funds are commingled. So what I would like to charge everybody who watches this is, now that you know this, don't go backwards. Make a conscious effort to make sure that if you have a business or an LLC and you're operating S-Corp, all of them, just make sure that you are not commingling your funds. Um, so then now going back to the tax side of the LLC, it just keeps things cleaner. It definitely keeps things cleaner. It's all it allows you to track your business expenses that are, I mean, you could do the same thing under a sole proprietor. You definitely could. But to me, as you grow, your business is supposed to grow just like you are. If you start as a sole proprietor and you go into an LLC, your next step is to get to that S corp. So it is just a bump up in order to get there. So you need to train yourself. That's what I'm saying with the owner's draws. When you pay yourself, you're not going to go in there tit for tat. Oh, I transferred this $50 for advertising, and now advertising allowed my company to make sales of 100. So I'm going to take my $50 back. No, we're not doing that. You leave that $50 in there, but you allow your business to grow in such a way where now you can transfer money to yourself personally. And then now you're taking consistent owner's draws. And then when you're taking consistent owner's draws, you're allowing yourself to get used to that S corp. You want to transition into an S corp out of an LLC when your net income is getting like 40, 50, $60,000, because now you are going to be overtaxed because of the self-employment tax. The government can't get their self-employment tax out of it. So you kind of want to take care of that so that way you can go into an S corp, and we can talk about that if you want to. But
I would
the
love to.
LLC, you do.
Mhm.
But the LLC is definitely the protection of your personal assets while you do business. But to me, it is a stair step to, to the mountain.
Yeah, because I remember reading some tax books, and there are plenty of books out there that
Yes,
don't necessarily help us fully understand. Because I remember them
correct.
saying the S corp, you're going to be taxed twice, like you're getting, your business is being taxed and you're being taxed. But I think the taxes work differently, and it does work in your favor. But I've
Correct.
never read it that way. So I would
Right.
love for you to explain the benefits of starting an S corp when you get to that 40 to $60,000 range.
Okay, so let me explain why you would leave an LLC first, and then that will help transition into the S corp. So essentially, when you work a W-2 job, the government can take out their Social Security and their Medicare taxes. Social Security and Medicare taxes total up to 15.3%. So any money that you are making that is not on a W 2, they can't get their 15.3%. So if you don't have an LLC and you get a 1099, that's still money that they want. And they are going to assess that 15.3%. Now, depending on your tax bracket from your income, you either get added another 10% or another 15. So when people say, oh, you should estimate about 25% of your income for taxes, 15.3% of that is your self-employment tax. And the other 10 is where it falls in the tax bracket of the income. Now over six figures, you want to get to 30 because that's where that comes from. So 15.3 for self-employment tax, and then the other 15 for the table that you fall on where your income falls. So what happens is that number keeps going up. And then as you get to the LLC and you're making your net now, because if you make $100,000 and then you have your expenses and it brings it down to 15.3% is, I don't want to say it's not that bad, but it's lower and it's not worth taking the payroll fees that come with processing payroll. What happens is when you want to get out of the self-employment tax and you transition into an S-Corp, you have to pay yourself. You have to give yourself a W-2 and you have to get payments, and then the government is allowed to take out their 15.3. So they're satisfied and they're happy. You have to pay yourself a reasonable salary. A reasonable salary is very relative, but just to give you two far ends of the spectrum, say you do hair, right? You can't say I only want to make $1 because I don't want, nobody to know I make money. That's not reasonable. You can't say I make $200,000 so that way you can go buy yourself a new car and your business is not making that much income. So those are very far ends of the spectrum, but you do want to do something that is reasonable in your for your area and for your expertise. But yeah, so that's what comes with having an S-Corp. There are some other tax things or whatever, but that's what most people transition is when they are trying to. And so yes, when you say double taxed, it is two different ways and they're not calculated the same. You're still being taxed on the income that your business makes, and then the other tax is you personally when you write yourself your payroll check.
Okay. Now I know that when we talk about families, oftentimes if you have a business, you can use your kids as employees of your business and
Yes.
them off. Can you explain that?
I can. So you have a couple of different options. My 17-year-old is on my youth advisor. She's on my youth advisory board, and I am an LLC. So that is a tax strategy in itself. You do not have to be a nonprofit to have a board. So we go and have our board meetings in very nice places that we get to write off. But anyway, here is something. This is a gem. When this opened up my eyes, I was I don't know. It's mad. I have 5 kids, so this made sense to me. Like, duh. So think about it this way, right? Your business can contract someone in order to do a service. So you can start paying your children very, very young. You just have to make sure that they have a task that's age appropriate. So if you have a baby that can't do anything but sit up and smile, as long as they're in the photo with you, technically you can pay. When they're a toddler, it's probably much the same thing. You can't unless you have a business that has to do with, youth and childcare or something like that. But when they get a little bit older and they can sweep the floor and clean your office, that's cleaning. You can pay them. When they get a little bit older than that and they can get on the computer and design some graphics for you in Canva, or they can, set your appointments, then you can pay them like that. So any children under 18, which is another benefit, do not over a certain a limit. I can't remember the limit. I had a thing yesterday and all the numbers are in my head, but any kid under 18 doesn't have to pay taxes. They don't have to pay self-employment tax. They don't have to pay Social Security and Medicare. They don't have to do any of that. So then technically you can shift money to them out of your business. Now you don't give it to them to go spend. That's when you put it in, the insurance or the other cash accumulating vehicle, so that by the time they are old enough, they got their own bank. They are their own financial institution and things of that nature. Now, when they're over 18, you 1099 them. And why would you 1099 them instead of W-2 them? You 1099 them because now you can teach them how to fill out a Schedule C. Now you working for me. What does it cost you to work for me? Well, you got to go get your own computer. Write that off. You got
That's
to do that. So you making a business owner. Not only are you passing this money into the family, you get the write off, they get the write off. Like we all writing stuff off.
I love that.
Yes. So yeah, that was spitfire for me when I got to put that into place.
Now, do people have to be 18 in order to have an LLC, or like is it in your name until they turn 18, or can they have it in their own name?
No, because in at least in the state of PA, they don't ask your birthday.
Okay, that's good to know. And then I was going to ask you something about something you said. Um, so when you talk about age appropriate, because I remember hearing somebody said, I think on a webinar I was on, like they need to be like 6 years old. But I love that you said that if you have toddlers, but they're in your pictures, because I do have a travel business. And when I travel with my grandbabies, I'm taking pictures. My daughter's in the business too. We're all taking pictures of all the babies,
Yes.
and also just the time that the freedom has allowed, so
Mhm.
we're able to do some things differently. So it's good to know about that. Can you talk about how grandparents can utilize that deduction if the parents aren't using that deduction?
Like being able to pay them out of your business.
Mm-hmm.
So here you can pay anybody out of your business and benefit. So what happens is you pushing your money to your grandchild will allow it to be a write off for you. Now, when it comes to your grandchild, no matter what age, think about it this way, no matter what age, the standard deduction right now for 2025, because we're getting ready to start filing those taxes, is $15,000 for a single person. If you could pay your grandbaby $15,000 as income, and you come down on the form and they say put your standard deduction, 15 minus 15 is zero. It's tax free, baby.
I love
So
it.
you have that option to do that, as long as the income is not coming in for the grandbaby from somewhere else to take them over 15,000. But so the standard deduction increases every year. You know what I mean? So you have that, that ability in order to pass money that way without, all the other things. That's just anybody,
Yep.
anybody.
Okay. Um, Now, so do the kids or grandkids have to file their taxes and they just pay zero, or do they not have to file?
They don't have to file.
Okay.
They don't have to file. It all depends on what the strategy is, though. It all depends on what the
Okay.
strategy is. Because technically, if you wanted, so my younger children, because were going with the LLC route and they took up trades, um, my son, we could do his, and then when he could walk into, even to get limited funding, he can walk in and prove that he had income because he had tax returns. So I don't want to say it's required, but why not have it?
You
It's
should have
better
had
to have it and not need it than
Mm-hmm.
to need it and not have it. And everybody knows that quote,
Yeah.
or wherever that came from. But
Yep.
yeah, no, I'm doing as much a lot of documentation is not required, but I'm doing as much documentation as required because the way my brain is wired.
Yeah.
Come at me for an audit. I'm audit proof. Come at me for, anything. I have support for everything. And even if I don't need it, I just have it because I'm trained, and then maybe that's from corporate America, and that's how I hope that my clients benefit from me, that we're going to overprotect ourselves. And
Yeah.
everything is going to be documented. Everything that I'm saying, I'm not putting it out there because it's, something that you can do or it's willy-nilly. Now, the strategy that whatever works for your situation is going to be documented. If you work with me, you coming out with documentation. I'm sending
I
I'm
love it.
sending people with bullets. I dare somebody to come ask a question.
So good, because we need to know how to have that structure. And most of our
Right.
parents and grandparents didn't know how to teach us that.
Correct.
My
Correct.
mom worked a job. My dad, came back from Vietnam and had disability. He did not know how to teach me those things. My grandmother never worked a regular job. And, she raised me. So she picked cotton and she cleaned people's houses for money. She didn't do any of those things. So the people above us, if they can't teach us these strategies, we have to teach each other and teach the
Correct.
next generation.
Correct.
Well, I love that.
And I
Um,
had to go outside of our community to learn it. So I'm bringing it back.
Interesting. I love that. I love that. What can you tell us about the next steps, like the legacy building? Are you talking about trust? Is that what you offer?
So yes, I there are trusts and wills. I don't write them myself, but I do partner with the team in order to send people over. Again, I only did that because when I was sending them to go get referrals everywhere else, I wasn't sure if they were being taken care of. So I do have that avenue. But yeah, and you get to talk to somebody. It's a free consultation. You get to determine if a will or a trust is better for you. I have a lot of background into what wills and trusts and all that. I went out and got the will first because that's what you're supposed to do. That's what they tell you. They don't tell you which one is better. I got properties, I have all this stuff. I have the children, we have policies, and it's like, okay, I have a will. Now what happens? Yeah, but when you have a will and that stuff goes into probate, they can't touch it. And
Mhm.
say my children, don't do so well with their finances. Before they get the money, their creditors are coming. I
Mhm.
didn't leave it to their mistakes. I would like to think that when they get the stuff that I'm doing for them, that they make a conscious effort to pay for anything that is, not financially on track or whatever. But that's their choice. But
Mhm.
no, when you have a will, your stuff first of all is public record, so everybody can see. You know what I mean? And they can start saying, okay, well, this person's about to get this money, I'm going to try, collect it. And
Mhm.
probate can hold some things up.
Mhm.
So you have to be very careful that, so it depends on the level that you are. But I got a lot of chips, and there's no way someone can control that. I work to get out of control.
Mhm.
So then I said, okay, well, I should have just paid the rest of the money, that because there's only a couple, difference in a will and a trust. So now I have a trust. I get to take care of it. I get to talk, do it. And then right now they have irrevocable and revocable trust. And I don't have to go into that because that is not necessarily the tax strategy thing, but I'm going into it from a personal standpoint.
Yep.
And then what happens is once it transfers to them, then it becomes irrevocable. They can't change it. They can do whatever they want. They own it, but they can't just say, "Oh, I want to sell this and sell this." No, I'm not letting you throw away the assets. There's other generations coming behind you, but you can make the money off of it.
That's huge. I love that because with with probate, my brother passed away and left me a house, and I ended up spending $10,000 for a lawyer.
Yeah,
He
yeah,
didn't have a will. I just happened to be the next of kin.
yeah.
And so, because he never married, never had any kids. Both of our parents are dead, and we had one sister who's also dead. So, like, I inherited the house because of that. But even just to get a house,
Mm-hmm.
it
It's a
was
fight.
$10,000,
It's a
and
fight.
it's years before I got
Mm-hmm.
that in my name. And
Yes,
so, it's work to do,
yes.
which it doesn't cost $10,000 to get a trust.
Right,
So
right.
invest that money up front so other people
Correct,
don't have to invest that money on the back end. Otherwise, they lose it.
correct,
You
correct.
know, I love that you said you want to be able to pass it down and then they can't sell it, because what we see historically, especially in the Black community, we owned businesses,
Mm-hmm.
after slavery. But a lot of people, the next generation, didn't want to go and do that business. They closed the business, sold it, and moved north or moved west.
Mm-hmm.
And so you might have had a restaurant or bed and breakfast, but if they even just still own that land,
Yes,
that would be money
yes.
that they could later use and make money from. But because they sold those properties, and the thing that's top of mind for me, because I'm from California, there was a family, a Black family, who owned beachfront land in Manhattan Beach.
Mm-hmm.
It was taken from them by the city. The city finally paid them back, and
Mm-hmm.
like millions of dollars to this beachfront piece of land. Well, those people who inherited it immediately sold it, and
Mm-hmm.
sold it at a discount, like didn't
Yes,
even sell it for its full value.
yes,
And I'm like, if you needed to use some of that money, take a loan, because
yes,
again, loans are not taxable.
yes. Yes. Yeah.
And so now you can use that loan to go buy you some more property or buy something else, buy some rental property. But just to sell that piece of land and at a discount and lose that for generations to come, Manhattan Beach, like bruh, I was a little disappointed in my people.
Yeah. So I will tell you two things, just like you said, the next generation doesn't know what to do with it. They see money, they don't
Mhm.
see asset, and they don't understand it. Or the previous generation didn't put it in, they didn't make it self-sustaining. So
Yeah,
it's painful when they get it. By the time I get an asset, I'm like, oh, this is cool. But there's unpaid bills, there's all this other stuff. Now, mind you, if that stuff is in probate, those unpaid bills still need to be paid while the government is trying to figure out how to get it to you or not get it to you.
yep,
So, and then if money comes along with it, that's restricted. So you can't use that. You have, so there's a lot of people who get assets and they're not in the financial position to play, or, they want the cash out of it, but it doesn't come across as a, a benefit or something that's worth holding on to. It's a hindrance.
yeah,
It was not looked at accurately, and I do chalk that up to some of the older generation not taking care of things in such a way they don't know any better. So they're not prepping their assets in order to pass down, and then that's when you get people who are like, is more pain than is worth, and it should be the other way around. It should
yeah,
be a blessing and not the other way.
yeah. Thinking about people planning for like 2025 is done. We're going to pay our taxes on that.
Yes.
But for now, 2026, and making sure that they're in the best position this time next year
Mhm.
to maximize their tax strategies, what do you recommend for folks?
So for the W-2 earners, I would definitely recommend you paying attention to your pay stub. Look at your pay stub at the end of January and see what it looks like. Watch it in February, watch it in March. So by the time March comes, hopefully you have already filed 2025 and you know if you like the outcome or you don't like the outcome. And then you have the opportunity to adjust for the remaining 3 quarters. You can adjust April 1st for quarter 2 and not like it after 2 weeks and change it again. I want you to not be afraid to change your financial position by filling out that paper. And if your HR person or somebody else has a problem filling it out and give you slack, that's wrong, because they should not be able to tell you that you can't do it. There's a lot of things now that let you do it on your own. You go to ADP or some of those things in your own portal and adjust it, but just pay attention to your numbers. If you are a business owner, you need to track what you were spending your money on. When it comes to spending the money, though, ask yourself a question: what is this for? Does this help me earn money? Does this, is this just for fun? Is it just because I want a nice shirt with a logo on it? You know what I mean? Like, what is it really doing for your business? And then you determine if your expenses are strategic or you just spending money. Their money leaks are everywhere when it comes into a business. So that's what I would do. I would definitely make sure you watch your funds as a W-2 person. Just make changes and see how it works. They have estimators on there, but some people don't like the way the estimators are online, and they don't they don't grasp it very well. But looking at your paycheck and comparing it side by side does, and that's easy. You control that. And then when it comes to the business owners, please track your expenses and your income separately from
Yeah,
your personal.
I love that. I love that. And so, for a person who is a W 2 earner, especially higher income earners, if they started a business, like a home based business now, that they would
Mhm.
be able to take the advantage of some of the tax benefits, utilizing the. Can you first, before I even get into that, can you explain the difference between the Augusta Rule
Oh,
and
come
federal
on.
tax deductions?
Yes, you can qualify for both. You can qualify for both. So, okay. Um, Most home office deductions are going to be based on square footage. So it's in your house. You're going to say, okay, my whole house is this many square feet. My office is this many square feet. And then everything it takes for your household to run and all that other kind of stuff, you're going to do. allocation. So if your home office is only 10% of the square footage of your whole house, then your bills, your electric, you can say 10% of it belongs to my home office, 10% of my internet, things of that nature. Now, when it comes to the Augusta Rule is a 14-day limit. Be careful going over that, and it has to make sense. So I use my home office all the time. I have a home office and I have an external office. But every now and then I have to turn my office into a studio production. That's not normal for me because normally I'm doing taxes or I'm doing financial strategy or some kind of administrative role where my computer sets up. But if I have to set up this whole thing where I got to put a backdrop up, I got to put my cameras and my lights up and all this other kind of stuff because, like I said, it's not my norm. I am taking over that space, and that space is now a studio. If I went somewhere else and rented a studio, they would have charged me $700 for that day.
Yep.
Now I can charge myself $700. I mean, there's other ways. I'm just giving you an example of how I utilize the Augusta Rule. $700 or whatever I choose, or if it's a square footage, if I say it's so many dollars per square foot, that whole day of that month is a studio day. So I got setup, recording, tear down. I got a whole activity on my Augusta bill that I'm giving to myself. Like, this is what we did all day. And then this is the support for what we are going to write off. And then you write yourself that check. You were paying for short-term rental fee.
Yeah.
And you do it monthly. You do it whenever. Just don't go past that 14 days. And make sure you have it. So if I look at my phone or wherever on my cameras, it's going to say I did recordings that day because I did it.
Yep.
You know what I mean? So I don't put in strategies where I just falsify things. Mine are real and my support is real. So, and then if I don't do it monthly, I track it in such a way because I don't want to necessarily take money out of my business until I'm ready to. So as at the end of the year, when I say, okay, we have the cash flow to pay for my Augusta Rule, then I'll just write that check. But I could do it once a month or whenever I have it scheduled. I'm sorry, I don't want to say monthly. But yeah.
And so
you can qualify for both.
Okay. I didn't know that you could do both.
Yes.
Okay.
So my office deduction is still going to be an office deduction all year long. That space is just my office. I'm still getting the write-offs for that is associated with, like I said, electric, internet. You know what I mean? I can't operate my business without the internet.
Yeah.
But yeah, and then the Augusta is something totally different.
And is rent or mortgage a part of that a home office deduction?
Rental mortgage?
Rent or mortgage?
Or mortgage.
Yeah.
You could. You definitely could. I don't think I'd do that. I don't think I'd do that. But yeah, you could. You could. But you would do it based on the square foot. So if your mortgage is so much and that office is solely, if you're coming to me and you telling me that's your office, I'm gonna have you take a picture. You need to take a picture. If I find a dog bed in it or a kid toy, I'm gonna tell you need to straighten that up and make sure it is solely office. And then you can write off everything associated with it. But yes, technically, if you were paying rent and you would have to rent that office space and it's 10% of your square footage, then yes, you could do the 10% of your square footage.
That's good. So, I don't even know what else. What else do people need to know going into this year's taxes or preparing for next year?
If you are looking for a tax preparer, please find somebody that you trust. Everybody does not have the strategic play, and that's okay. You don't necessarily need a strategist to do your tax prep, but you do want somebody who is at least going to make sure that they are asking you the questions to make sure they are maximizing your deductions so that way your 2025 is filed clean. There are so many tax preparers online that you can find anywhere. You can go to local places and all those things like that. My firm does taxes in all 50 states. So we are accepting new clients, but you just, what I would say definitely for 2025 is done. You want to move forward doing something better. And if you're looking at things in a strategic way, then you want to make sure you have somebody on your team that supports that. They need to pull it out of you So they need to have experience. You don't know what you don't know. And so all I'm just saying is it's very important for you to find the right fit. Everybody is not a fit. Everybody doesn't fit in my ecosystem, and everybody shouldn't fit in yours. But I definitely would make sure you find somebody that is you trust, that knows their stuff. And then for 2026, if you have that person that you trust, you should be able to come at them and say, "Hey, this is what I'm thinking and this is how I'm going to run 2026." If they don't have the right feedback for you, they're at a different level. There's nothing wrong with where they are. Just find somebody else. You can't elevate if you can't find somebody else that's going to elevate you. So hopefully that answers your question.
That is really good. And please tell people where to find you if they would like to come to you for their taxes.
Oh, sure. So I am on all socials at Greeno Tax, GreenoTax. And then www.greenotaxservices.com. You can find stuff on there as well. There is a 30-minute free financial clarity call. Book one. Feel free to ask me questions. I will do the best that I can in order to try to assess your situation in that short amount of time. There is no judgment here. So if you want to come with your messy books, I got a nice team of people who will clean it up for you. We have a lot of different low cost apps that they're not ours, but that we give out to people so that they can manage their own stuff. Some of those things are free in order to manage your books. But yeah, please just find somebody that you trust that will make sure that they have your best interests at heart. And then y'all will grow together because they'll learn off of you and you will learn off of them. But I'm here.
I love it. Yeah. So when we get done, text me the information again so I can put it in the description of this video. Because I
Absolutely.
want people to be able to go and have access to you and get book that consultation.
Please.
So they can maximize last year, but be prepared for this year and
Absolutely.
be
It's
on the
early
right
enough.
track.
Yes, ma'am.
Yeah. And I have a team of over 100 agents on my travel business. So I'm gonna definitely send them to you because they need that tax support as well. As many of them as that don't have somebody they're working with already, I'm sending them your way.
Please do. Thank you. I would
Yeah,
love to provide insight and help them grow.
I appreciate that. Any final words before we close out?
It was a pleasure. This was fun. I hope everybody who watches this learns something. But what I charge you with is you now have exposure. Do not go backwards. You cannot think any other kind of way. If there's anything that we discuss here on there that you were doing, do not shoot yourself in the foot, give yourself grace, move forward, make the conscious decision. Again, taxes are not forms, refunds, or payments. It is the byproduct of all of the decisions, financial decisions that you've done that year. So make sure that you put yourself in a financial position to play better and different going forward. You want the longevity. Everybody who's watching this is supposed to have children, and you want to be able to give them something for the future. If you can't teach them how to preserve assets or start a business so that way they're not necessarily banking on that W-2, I charge you to do that. My daughter, my oldest, is 29 and she'll be 30 this year. She bought properties in a different area, bought one and didn't like the neighborhood, and she decided to buy all the way around the corner. She beat me and she 29. She gonna retire in her 30s. Well, yeah, in her 30s for the most part. So if you're looking at a monopoly board, this girl owns from short line all the way around the Redding. And there's a business that has repairs cars in the middle. So I'm telling you, it can be done. And I just need you to protect your babies and do everything that you can possibly do. If you want to learn about life insurance or anything else, please let me know. But I'm coming from passion. Everything that I learned was because I didn't want them to have to do what I had to do. And now I'm sharing it with y'all. So take care of your little people, do something different, and make great financial decisions. Thank you.
Thank you. That was absolutely amazing. And I know that people have learned so much. You added so much value, even
Thank
just to me. I'm so glad I could get my questions answered. Um, but listen, when you have somebody at your fingertips who has 3 decades of experience. Okay, she has probably more experience than some of y'all have been alive who
Yes.
are watching this. You definitely want to get in there and book that consultation and see what she can do to help you get your finances in order and to be able to help your family set up for generations to come. And I love what you said about retiring early, because it's time out for people waiting until they're 65 to retire.
Yes.
I'm meeting people that are in their 70s that are not retired yet. I met a lady who was like 75. She was still working for the state of Nevada. I said, "When are you going to retire?" She said, "I'm never going to be able to retire."
Right.
Somebody failed her.
Yes.
Let's make sure we're not failing ourselves and we're not failing the next generation.
Yes, ma'am.
So, yes, it was a pleasure talking to you.
Yes,
And
same here.
yeah, thank you so much for your time.
You're welcome. Thank you for having me.
All right.